We're going to talk in this video about one of my favorite topics, which is tax. I just think tax is really fun. And then I also want to talk in this video about cryptocurrency. Like we're going to talk about Bitcoin or Ethereum or NFTs. I think there is a mysteriousness about cryptocurrency and NFTs. And then there is a mysteriousness about taxes, and somehow those get collapsed. And now there's a mysteriousness about everything. And I want to remove the mysteriousness in this video. And I will also give you a tip here and there about how you might actually save some money on taxes, and whether it's Bitcoin or cryptocurrency or whatever it might be. Really, the rules are kind of the same. Again, I just think there's some mysteriousness that gets collapsed here between cryptocurrency and the IRS. So let's just go through scenarios, because I think that's actually one of the easiest ways to learn. Let's talk about buying cryptocurrency and selling it. So let's assume that, and I'm going to make some numbers up just for the sake of making numbers up. Let's say you bought Bitcoin in January 2025, and let's say you bought it for $10,000. And let's say in April of 2025, you sold Bitcoin for $25,000. So you bought it for 10, you sold it for 25, you made $15,000. Yay, you. That's an awesome thing. But you owned that cryptocurrency for less than a year. And what that means is that the gain that you have on that, which is that $25,000 sales price minus that $10,000 acquisition price, that gain there of $15,000 is now going to be taxed at a short-term capital gain. And so what that means is that you're going to pay taxes on this as if you had earned it on your job. Now, some people get very angry about, oh my God, I can't believe I have to pay taxes on this. I would encourage you to embrace the idea that paying taxes means that you made money, and that is a good thing. And then arguably your taxes go and pay for things that benefit you in your community. So that's short-term capital gain. You pay taxes on it as if you'd earned it. Let's change the scenario just a little bit. Let's say you bought Bitcoin in January of 2024 for $10,000 and you sold it in February of 2025 for $25,000. You bought it for 10, you sold it for 25, you made $15,000. Yay, you made some money on cryptocurrency. It's awesome. Now, because you've owned that cryptocurrency for more than a year and a day, more than 366 days, that instead of being taxed as short-term capital gain is now being taxed at long-term capital gains rates. And typically speaking, depending on what your income bracket is, you will pay less on a long-term capital gain than you will on a short-term capital gain. So if you can hold on to an asset for a year and a day, and of course you're going to have to be bullish on its growth, right? Because usually you're getting out of an asset if you think it's reached its peak in terms of its sales price. But if you can hold on to it for a year and a day, you will pay less in taxes. That is something that is worth considering when you're buying any kind of an asset. Okay, so that's long-term capital gain. Okay, let's move on to scenario 3. Let's say you mine cryptocurrency, and not only do you mine it, but you get paid in cryptocurrency. People think, well, since I didn't get paid in dollars and nobody's issuing me a W-2 and nobody's sending me a 1099, that somehow I don't have to pay taxes on that. It's actually not true. I suppose it's all legal till you get caught, right? I've had that conversation with clients, but what you're supposed to do is declare that income, and you're supposed to pay taxes on it as if you had earned it on your job. So it's taxed on an earned income basis is what we would call it. And there's, again, like you made money. That's an awesome thing. And yes, you have to pay taxes, which feels kind of lousy, but arguably it supports your community. And you're staying on the right side of the IRS, which is arguably a good thing as well. So that's if you earned cryptocurrency. Now, let's say you stake cryptocurrency and you allow somebody else to use your cryptocurrency to make money, and they're paying interest to you on that cryptocurrency. That interest is income to you. You should declare that every year, and that should get taxed as if you had interest income, which typically is taxed on an earned income basis, as if you had earned it on your job. So let's say you give $100,000 of Bitcoin to a service that then stakes it and sends you money for the use of your Bitcoin or your cryptocurrency. That interest that you're earning, even if you're paid in more cryptocurrency, is earned income to you, and technically you should be paying taxes on that. Now let's look at scenario 4. This is a little bit more complicated, but I know you can do it. So let's say that you bought cryptocurrency at $25,000 and you sold it later on for $20,000. So you lost $5,000 on that. But you have this loss now that is around for you. And you can use that loss in a couple of ways. One is against any gains that you have. And generally you match up long-term gain with long-term gain and short-term gain with short-term gain. But there are some other rules around that. But you have this loss now. Now you cannot take that loss against earned income except to the extent of $3,000. So you have a $5,000 loss. You can use $3,000 of that loss against your earned income. You will save a little bit of money in taxes. And the $2,000 that you were unable to use that year, you get to do what's called carry it forward. You get to carry forward that loss to the next year. And then next year, you can also deduct that $2,000 against your earned income because it's less than $3,000. And let's say you had a $10,000 loss. You could spread that over 4 years, $3,000, $3,000, $3,000, and $1,000. So you do have the ability to take advantage of that loss. Let's just alter this scenario just a little bit. And let's say you have this $5,000 loss on cryptocurrency, but you also have a $5,000 gain, let's say, on Microsoft stock. And let's say you decide to go ahead and sell that Microsoft stock. So you've made $5,000 on the Microsoft stock. You've lost $5,000 in cryptocurrency. You can actually use that loss to offset the gain at Microsoft. And now you aren't going to pay taxes on anything, right? Because the $5,000 gain at Microsoft minus the loss, right, is zero, no taxes to pay. So oftentimes what I'll encourage clients to do is to take their losses when they can and then use them against gains in the future, whether that's in the current year or future years. Because just like you can carry forward a loss, you can also carry forward a gain. So that is another way that you can strategically think about your gains and your losses to minimize your taxes over time. And again, there's nothing unusual about this. Just the fact that it's cryptocurrency doesn't really matter. It's the fact that it's an asset and that you own it and that you've had it for a period of time and now you've either sold it at a loss or a gain. While you have it, let me just make this point, and you haven't sold it, so you haven't experienced, I'm going to use that word for this moment, a loss or a gain, then there's nothing to do. Nothing happens. There's no taxable event that you have to deal with on your taxes until you've actually sold that thing, either for a loss or for a gain. And then you're going to have to reconcile what that's going to mean on your taxes. Okay, let's move on to the next scenario. In this scenario, let's say that you have an NFT. It's super cool, and you sold it for $5,000, and you went and took that $5,000 and you bought these really cool, rare sneakers. So it's kind of an art exchange in a way, right? You know, you have this NFT that you sold and you bought the sneakers. So there are these concepts in the tax code, a 1031 exchange, a 1035 exchange, where you are able to exchange or sell one asset and acquire another asset of like kind, and there's no taxes to pay. At this point in time, the sale of the NFT and that purchase of those super cool shoes are not considered a like kind exchange. There's nothing in the tax code that says that the gain now on that NFT is sheltered by the purchase of these super cool sneakers. And so there's no provision for that in the code. Again, I guess it's all legal till you get caught, but it's not the risk that I would take with the IRS. Let's just say that. And so you're going to pay capital gains tax on that $5,000 sale of that NFT, whether it's short term or long term. And now you've purchased the super cool sneakers. And then at some point you might sell those for a gain or a loss. And you're going to deal with those very independently, that transaction very independently from the NFT transaction that you had. And this last example, I want to talk about, charitable giving and what you might do with cryptocurrency or frankly, any assets that you have that are highly appreciated. And there are strategic times in your life to do this. And there's lots of ways to do this. But if let's say you have $10,000 in Bitcoin and you don't want it for whatever reason, or you don't want to sell it for whatever reason, typically what's happened is you bought it for $1. It's now worth 10 grand and you don't want to pay the taxes on the 10 grand by liquidating that thing and then having to declare the gain on your taxes. However, if you are charitably inclined, you can donate the Bitcoin to a charity and the charity can liquidate it. And because they have 501c3 status, make sure they have 501c3 status, they've got that status and they can sell it and they don't pay any taxes. So if you're kind of in the habit of donating money to organizations on a regular basis, maybe what you do is you donate your highly appreciated assets. And that can be cryptocurrency or an NFT or anything that somebody else at that organization can go and sell and then get the money to go ahead and support the cause that they are promoting with their organization. It is another way for you to donate money without having to incur any capital gains. And it's a huge benefit for the charity. Think about it. If you sell for $10,000 And that's your gain too. And you're now having to pay, let's say 25% in taxes to the state and federal governments. You can only then donate $7,500 to the charity, rounding to make this easier. But by giving that $10,000 directly to the charity and having it liquidate that Bitcoin or NFT or whatever it might be, now they're getting $10,000 rather than $7,500. And you'll have to ask the charity whether or not they can accept cryptocurrency. Not all of them can, but there are resources online like the Giving Block that'll allow you to donate that money and effectuate that transaction. So you can look for those kinds of opportunities as well. So takeaways from this, which I think are super important. Timestamp all of your transactions that you do with Bitcoin. And I know some of you own the keys. Some of you are using platforms to keep track of your cryptocurrency. I think it's super important to pick a platform if you are using one that is reliable, that you know your cryptocurrency stands a high likelihood of returning to you when you want it. And timestamp all of it so you know exactly when you bought it, when you sold it, what lot, where the transaction happened. All of those things really need to be recorded. It's going to be super important for your record keeping purposes. The second thing I would have you do is take a look at your short-term and long-term holdings. Like, can you hold your short-term stuff a little bit longer and get the more favorable tax deduction at the long-term gains level? That's worth considering. Or take a look at what your actual tax bracket is and what your taxes are actually going to be. If you're in a high enough tax bracket, the short term versus the long term capital gain might be so close together that if you're really wanting to sell the asset, you sell the asset. Again, if you make money, yay, and you'll pay some taxes. But take a look at the short term and the long term. And then the final thing that I'll say is use your losses strategically. Use them against gains, use them against ordinary income as it's allowed, or donate it to charity. There are just ways for you to manage cryptocurrency or any highly appreciated asset, really, and use it to your benefit, both tax-wise and to do good in the world. So if you have cryptocurrency or NFTs, any kind of digital asset, in my mind, track it, report it, keep more of it, do smart things tax-wise with it. Ignore the rest. It's all really noise. Don't get caught up in the noise. If you have any burning cryptocurrency questions, I'd be happy to answer. You can either direct message me or put it in the comments below. And of course, I'm always happy to have a conversation with you. Just reach out. I'm Jessica Lanning. Lanning Does Planning.